Okay, let's get started within the Fibonacci, because I go over an exponential level. Oftentimes within charting softwares, you will see the linear version, or even if they're using the calculations on a manual level, they'll use this formula rather from one of the exponential one. For when you get markets that capitulate or rise rapidly, many folds down or up, then it becomes more effective, especially in the real world where markets can tend to lose 60, 75%, gain 250%, and even levels even higher than that. It makes it much easier for calculating the retracements. So let's get started, and it's going to be important for this type of thing within the crude on the monthly term time frame, because the high happened to be 147-ish, 146 and 2/3, and the low is 32.70. So if we do some basic math, what we'll do is we will take the 143.65 and dividing it by the low of 32.70, it basically lost 4 1/3, 4 2/5 of its value, just like that, in what, 8 months? 8 periods going down, 7 periods as I recount. So over little over a half a year, it lost everything that it had gained in a basically 4-year period. Around 4 years. It lost it all in a half a year. So that would be about 8 times the speed of the most previous one. And since then, this is like at the end of 08, start of 09. So we're now 3 years in the recovery, if you will, or the movement from this point. We haven't yet gotten back here, although we've confirmed that we're going there. But it's showing us signs that it doesn't take as long to go down when it goes up. Why is this important today? Because if it does go down, it's probably going to do it fast. And therefore, I've already talked about this is a confirmed move. And if it doesn't happen, if a confirmed move as powerful as this one does not happen, we got one heck of a failure brewing within this level. It's still obviously lower here than here. But the retracement from this low and this high is so super strong right now that it's even showing that it's not only confirming going here, so it's going to break this level, go up here. That's what the market should be doing. However, whether it makes a higher high or not, if it breaks below here, that's basically going to be dynamite on the way down. I don't think it's going to happen, but I do think it's possible. Everyone seems to talk about markets crashing and capitulating on all levels, gold, silver, stocks, all this type of stuff. Oh, the Dow's going to not even go down to 8,000. We might even break that 6,000 or 2,000 or whatever. And maybe we do have a large percentage move, but is it ready to happen yet or any time in the near future as well? As one of the scenarios for a major crash could be when oil's at 260, silver's at 180, gold's at 3,000, stock market's at 17, 18,000, and then boom, then it all happens. I don't know, maybe it won't, maybe it will, but as far as this layout is concerned, within the methodology on how it broke above this level, and now after we had this situation, it really need to confirm that it's going to hold above this level, and it's done so tremendously. It not only was really strong here, but it was extremely strong here as well, pretty much confirming that this market is going back to its previous top, because whenever you can confirm breaking the second line, the 2/3 retracements from a high to a low, same thing on the reverse, that you're going down to the previous level. And by showing the reverse, if the market had a big gain higher, and all the red and green looks bad, you'd be looking to short this thing back down to this bottom. But let's just bring this back to its normal view as of now. Okay, and again, let me just reload this again so that I don't have to get my the lines in there. There we go. So now focusing back on the earlier part of this ordeal, this was not resistance. Rather, it kept going. So what that usually means is now instead of looking for resistance, once you're here, Instead of looking for resistance, you're now looking for support there instead. And you're saying to yourself, okay, now this is telling us that things are really picking up. We could potentially, on this candle, have made it to this level. Now, that didn't happen, but it very easily could have, because that's what markets do when they don't care. They'll just go from point A to point B really fast, sort of like we've seen down here. But it did come right down to this level perfectly. It was an awesome opportunity to pretty much pick this bottom perfectly. The level you see here is 58.01, so at pretty much 60.61, you're in. Plain and simple, and it did hit that level. Now, as it hits this resistance point, you consolidate for pretty much a half a year, if not, for the most part, a full year within this before it finally broke this set. Now, we're going to switch this up to the daily chart instead of the monthly chart. And this is what we got. We had a gain on Friday of 194, or about 2%. It's up about 40% over the last 100 days. And it's holding this support level from this low. It's an automated low. But before we take a look at the last Fibonacci that we're looking at, let's take a look at the chart for what we see here. That's a pretty decent size range, or resistance point that has clearly been taken out. So just as I was stating before about that previous breakout, where you now have a resistance point that becomes support, that's the case. The question is, we're breaking out. Where are we heading towards on this market? Where is it going? It's obviously at an uptrend. It's at its highs only 1/5, 1/7 of a percentage away from it. So we'll take a look at the previous Fibonacci. We'll eliminate the lines and these moving averages and just look at the chart, because I'll be drawing the lines in. And this is what we have. We have a 61.8% retracement at 82.67. We know we spent months at that just by looking at his previous chart. So there's the last point where it's lifted off from this level. This was that failed move just below it. And it has not found support at that level, nor do we expect it to anytime soon, unless, of course, we have one grand failure. 102.91 is the next level. So how important is 102.91-ish or so? It was only a level of resistance fought on multiple occasions. And this is the Fibonacci level that, well, most people don't see, but it still seems to work on so many occasions. Now, granted, we've already talked about the two measures of the Fibonacci. So if we take 146 2/3, subtract it from its low, which I think was 32.70, and then we get the difference, multiply it by 61.8% and add the low to it, then we get 103, a little over it. So it's the same number, a difference of like 20 cents or 1/5 of a percent. So meanwhile, we have all of these traders that are thinking it's breaking a significant 61.8% retracement, when in reality, it's breaking the 76.4. It's already confirmed that it's going to that next level, which of course is the 147. And the next significant level is 117.82. We're pretty much going there. Now the question is how is it going to get there? Is it going to get there while we find support at this level? Because if you're looking on any retracements to find a level that is just such an obvious one, and this is one many people see as well, because the old trick of previous resistance and support is that it's the oldest trick in the book, but it still works a lot of times. And that is, if it does retrace, then you know it's going down here. But maybe it just continues moving up to 117. But once you get past that 85.4, then it's over. The next level is like 90.9%, but these levels becomes extremely short term, that you're just ready at any time to go back to your previous high of 147. So I hope this helps. And I was trying to figure the numbers in there. They were right there. Anyway, thank you for tuning in to today's video. and have yourself a magnificent week. Bye-bye.